Russian oil at the end of the day is still flowing, Amena. You kind of begin to wonder if the West has lost its leverage.
Oil always finds a way. For many, many years, the Iranian barrels have been under sanction, but they do find a way into the market, whether through the shadow fleet, whether through buyers that are willing to take discounts. China is namely the country here that Trump wants to target for many reasons. You can't stop the flow of Russian barrels or Iranian barrels for that matter. So this zero export policy, it just doesn't work.
Welcome to Year in Business. We're joined by Amena Bakr. She's the head of Middle East and OPEC-Plus Insight at Kpler. She's one of the most plugged-in oil market insiders you're going to meet. Amena, great to have you on the program.
Thank you so much for having me, Yusuf.
So the big news is the summit between the US President Donald Trump and his Russian counterpart Vladimir Putin. If they do manage to hammer out a meaningful deal, and it's still a very big if, and let's assume that it sticks, what would the impact be immediately on global energy markets?
Oh, that's a really big if, Yusuf. But we've been hearing kind of positive things being said out of the US and as well out of Russia. I mean, I think everybody wants to reach a deal to some extent. There are some pundits out there saying that whatever deal they reach, it needs to be a compromise on Donald Trump's side, meaning that Russia would get to keep a lot of the territory, like the Donbass, etc. But what that would mean to energy markets is really removing some of that uncertainties related to all of these tariff announcements that Trump has been making over and over again. I mean, the most recent one was targeting India, basically saying that India buys a lot of Russian crude and this oil helps Moscow fund the budget against the war in Ukraine. So removing some of that tariff uncertainty is going to help stabilize oil to some extent, add a layer of predictability. I mean, ever since Trump took office, we've been seeing a lot of confusion over what's happening. I mean, even traders are calling it the Trump effect. Removing that layer of volatility, of unpredictability is going to help overall, I think, stability in oil markets.
Okay, so I was looking at a tweet from Anis Al-Haji, and he was saying that prices would initially decline, he writes, but traders will soon realize that Russia's production increase is going to take some time. And then he also adds that the sanctions on Russian LNG are expected to remain in place. Do you subscribe to that view?
I agree that prices would initially drop because tariffs just generally put a bullish edge to prices, meaning that people are afraid that you're going to get a loss of supply. And if you get a loss of Russian supply, yes, of course, that puts the market in a situation where you would get higher prices. So initially, yes, you would see a drop, but I mean, I've been monitoring what's happening with OPEC-Plus. They've been unwinding their cuts. And what you're seeing in terms of an increase in the production ceiling and actual barrels coming into the market, there's a big mismatch there, Yusuf. I mean, we're seeing much lower volumes actually hit the market. And I subscribe to the idea that Russia can't increase its production further.
I mean, the US president is also apparently considering secondary tariffs to the tune of 100% on Russian crude oil. If that does come through, how would that ripple through global markets?
No, that will create a lot of fear about, I mean, all of the buyers of Russian crude are going to start re-examining their positions again and starting to source different types of oil. And I'm even talking about India here. Initially, I mean, the reaction from the government was that India's national security and energy security would come first, and they would not look for alternative barrels. And there was no directive by the government to any of the state refineries to start sourcing alternatives. However, you have private refineries in India, like Reliance, for example, and they have a lot of exposure to the U.S. financial markets. And I would just say something about India in general. They have less risk appetite compared to China. They're more exposed to the U.S. financial system. So if you do impose secondary sanctions, that will in turn result in less buying. And that would definitely be something bullish for prices.
I mean, ING was saying about 1.7 million barrels per day could be at risk if that does happen. What do you make of the response of the Indian government so far on the subject? they've been caught off guard. You've written a piece about this issue specifically. So run me through kind of what the dynamics are likely to be in the coming weeks.
Sure. With India, Yusuf, you have 1.4 billion people depending on the government to keep the lights on. So you can imagine the responsibility there. 40% of their imports is Russian crude. And they've been doing that because over the past years, they have been receiving quite a bit of discounts on these barrels. And this is something that they need to support their economy. So far, I mean, alternative crudes would be namely from the Middle East, you would say from the US, but they're not going to receive these kinds of discounts on these barrels. And they haven't even been making big inquiries to this replacement. To be frank with you on a personal level, I'm happy with the response that was given by the Indian government. It was firm. It was basically saying that they will not, India comes first. If America wants, Trump wants America to be first, India will also put its national priorities first. So I think it was pretty good as a response.
And you felt that it was thoughtful and mature of a response. It wasn't rushed and getting drawn into tit for tat. Like they waited, a day or two, and then through the foreign ministry put out sort of a complete position paper of sorts explaining what their view is and how, what is coming from the US side is just completely unacceptable.
Absolutely. I mean, this is not something, India is not a country that would rush into immediately, a rash decision when it's faced with this. And they are trying to negotiate now. You saw the Prime Minister Narendra Modi in talks with Putin, but also with Zelensky, and just showing that India can play a part in bringing peace. It doesn't have to be that way that, they're forced into a corner by sanctions and tariffs. Trump has a very different style, and I think India is being responsible here.
Russian oil at the end of the day is still flowing, Amena, despite the price caps, sanctions, or the shipping restrictions. You kind of begin to wonder if the West has lost its leverage that it thought it had.
Oil always finds a way. Sanctions are not. We've seen this with Iran for many, many years. The Iranian barrels have been under sanction, but they do find a way into the market, whether through the shadow fleet, whether through buyers that are willing to take discounts, take a little bit of risk. China is namely the country here that Trump wants to target for many reasons, trade war aside, but also, I think he has a fear that the growing influence of BRICS in general and the possibility, I know that this is something that won't happen overnight, not even in the next decade, but the replacement of the dollar, this is still something, it's out there, right? The idea is out there. So I do understand what Trump is trying to do, but at the same time, you can't stop the flow of Russian barrels or Iranian barrels for that matter. So this zero export policy, it just doesn't work.
For everybody watching, stick around. Later, we're going to be breaking down the real story behind Saudi Aramco and dig deeper as well into the latest economic data and indicators out of China. So make sure you watch all the way to the end. So, OPEC-Plus, they decided to raise output by, I'm looking at the number here, 547,000 barrels per day in September. Now, if they really thought the market was healthy, which they suggest it is, they wouldn't be adding these barrels into the market. It sounds to me like they're seeing weakness inbound that they're not admitting to yet.
Well, they are saying that demand is healthy, and therefore this healthy demand is encouraging them to return barrels to the market. But I want to take you a little bit back here and look at the beginning of 2025, Yusuf. I remember in January, everyone, and every analyst, every trader, everybody in the market was saying the market is so oversupplied. You're going to get supply from outside the OPEC-Plus group. Prices are going to collapse if OPEC decides to bring back even one barrel. So the suggestion was at the time that OPEC needs to sit on these voluntary cuts until the end of the year of 2025 or 2026. They do have a bunch of cuts that, by the way, expire in 2026. But we'll get to that. That didn't happen. OPEC decided to start the unwinding process in April. And then from that point on, the initial plan was to bring back these barrels over an 18-month period. They managed to do it over 6 months. And they were encouraged by the fact that, one, yes, they do see demand for their barrels, but they also see that the price is not collapsing. I mean, if you look at Brent prices today, I don't know if we checked, I think it's 68. You can check now while I'm talking. So this is still very much an acceptable level. And as I said, this increase in the OPEC production, it's not actual production. It's an increase in the production ceiling. The actual barrels are much less. If you look at April, May, and June, I would say of that total, 30% less of that ceiling has actually hit the market. So I think we're going to continue seeing that. A lot of countries are facing problems in reaching their allocated quotas. And don't forget about the compensation cuts. You still have countries like Iraq, Russia, Kazakhstan compensating for the overproduction.
I take your point, Amena, but I look at the data released by the U.S. government as it pertains to gasoline demand in May, for example, right? So that was the weakest since 2020, and that was the start of the summer driving season, which traditionally should see a lot of these supplies getting soaked up quite easily.
Listen, Yusuf, the idea that we might face a slowdown in the economy is absolutely there. And I would say within the next 6 months, we're probably going to see, there are already the signs that we're seeing that the global economy is going to slow down. And this brings me to the fact that, within this OPEC-Plus policy, they wanted to do it during the time where you had demand, especially in the Gulf. We've spent here the summer in Dubai, between Dubai and Saudi Arabia. You saw that, the climate was 50 degrees plus. So they used a lot of that additional supply they were bringing on domestically for crude burn. So that managed to soak up some of that extra supply. In addition to that, if we just take ourselves out of the summer period, you would say, okay, we could be facing slower demand due to a slower economy, etc. They do realize that. And that's why in the agreement, they clearly stated that they could always go back and reverse the entire 2.2 million barrel per day cut. They could pause and just wait and see what happens. And they could also start attacking that 1.66 million barrel per day voluntary cut and unwinding even more production. So they put themselves in a very flexible position. If you ask me, I think for now, just looking at the way things are, I would say they would just pause and wait and see what the coming months bring.
So what about the additional 1.65 million barrels per day of an unwind of the cuts? Is that a realistic scenario, or are you saying that's still a little bit of a remote outcome?
I would say that it's on the table, but for now, I don't see them doing it. That cut is basically in place until the end of 2026. And for now, I would say it would stay that way.
Okay. And then I look at comments from the CEOs of big oil, right, during earnings season, just to understand what they think about the market and where they believe prices are headed. BP said that OPEC's back in the driver's seat in terms of where the price goes. You could argue that the Gulf countries like Saudi Arabia, they need a higher oil price. And Bloomberg Economics was saying that the government needs a fiscal break even of $96 a barrel. You just talked about the oil price, and we're far away from that if it continues to average around this level. Where do you see the oil price headed end the year into 2026, given all the variables we're discussing today?
I would say, let's just look at the demand side of the equation for a second. If you're looking at the years 2010 until 2024, and let's take out the years 2020 and 2021. These are pandemic years. They were kind of out of the ordinary. And then you look at the trends between the first half of the year and the second half of the year, and you average that out, you would find that growth between the two halves is a median of about 2.2%. It means that the second half of this year, if we use this equation, would grow by around 2.2%. That that is around 2 million barrels of total liquids demand growth. Now, with the kind of economic, the threat of an economic slowdown, with the extra barrels coming from countries like Brazil, Guyana, etc., and if we do get an easing of this tariff rhetoric, yes, I'm saying, I mean, the fourth quarter looks like a challenging quarter. I would say that most likely, and even our predictions at Kpler indicate that we are going to see oil prices slide perhaps into that low 60s level. Maybe even lower, who knows? I mean, that's a kind of extreme scenario, but we are seeing the trend going to a lower price. You mentioned
I wouldn't say it's an extreme scenario at all. I mean, I look at the transcript from an earnings call with the CEO of ConocoPhillips, Ryan Lance, and he says they've been relatively stable in the $60 a barrel range, but we probably see that continuing with a bit more pressure to the downside. That's exactly what you're talking about now.
Yeah, I mean, there is that risk, of course. I mean, we are seeing the trend kind of go down. Whether it's going to break into the 50s is another question here. But yes, the trend, especially into the fourth quarter, which is a challenging quarter, is seeing the price go down. This is from kind of the information that we have right now. That might change with a Trump tweet, is given the very volatile situation that we're in. But this is what we could see for the time being. You mentioned break-evens. Break-evens are always very high. Saudi Arabia in the 90s, other Gulf countries maybe in the 80s. I'm sure countries like Iraq and Libya also have very large break-evens. But you have to look at the country's ability also to tap into debt. In general, the Gulf are better positioned to tap into debt during these times compared to other countries.
Yeah, but can and want are two different things. And I do think as much as Saudi Arabia has done a lot in the debt market, they'd still prefer to handle things differently and continue to maintain an advantage rather than to play cards.
Sure, but how can you force an oil price? That's the other thing. I mean,
6 to 12 months. Well, I mean, you take out barrels, right? So that.
How effective is that, or how effective? I mean, it's and again, are we talking about a prolonged period of low oil prices? Depends on how long they think this trend is going to last.
Agreed. Yeah, Goldman Sachs reiterated their oil price forecast, so they see $64 a barrel in the fourth quarter, and then $56 in 2026. The thing I want to talk to you about is the Middle East risk premium, right? So now that the Israel-Iran war is over for now, again, obviously it could kick off at any moment again, but that's out of the way. The devastation in Gaza is still playing out. Tensions are still relatively high if you think about Strait of Hormuz and sort of the key passageways. But if there's one learning I've taken away from this, is that for the first time, the energy infrastructure is kind of respected and insulated. And as a result, energy prices and oil prices in particular have been very resilient compared to any other period in this region where we've had confrontations of this sort. First thing that goes up dramatically would be the oil price. This time, they managed to work around that, right? So this is incredible, really, by any stretch of historical standards. So I want to get your reaction on this, given that you've been in this game for a while.
No, absolutely. I mean, what I've noticed kind of over the recent years, that oil prices are less reactive to geopolitical risk than we're traditionally used to. I mean, if you came to me, 15 years ago and told me, okay, there's a war between Iran and Israel, what do you expect? I would say, oil in the 3-digit zone. That didn't happen. One, I think the market also knows how to assess risk. They saw this war and said, okay, this is something that's probably going to be contained. Oil prices only went to 80, touched 80 very, very briefly, and then started moving down again. Even after Trump targeted Iran and the targets that he had destroyed in the nuclear sites and so on, oil prices opened and they fell that day. I mean, it was kind of somebody knew something. Someone was briefed. This was my initial reaction.
Definitely looked like it. So
yeah, no, I mean, you have to ask all kind of questions. I don't want to get into conspiracies, but the market seems to have kind of educated themselves on how Trump does things and is almost kind of immune to geopolitical risk. You mentioned Gaza, Palestine, and the ongoing horrific war, which I really hope ends. This hasn't resulted in any outage in supply, and that's why we haven't been seeing a reaction in prices. And as for Hormuz, yes, there were threats even during that 12-day war. Yusuf, I don't know if you remember that the Iranian parliament put up something there saying that we're going to lay mines or we could close it. I mean, again, that wasn't taken very seriously because that would have meant, I mean, Iran would have been shooting itself in the foot and also harming its biggest ally, China.
So the Middle East risk premium is probably now just a couple of cents above zero, right? Completely out of the price. It's not even worth the talking point unless the market's getting overconfident in sort of stability and these energy infrastructure components being respected and not harmed.
Yeah, unless we see something kind of massive or a massive supply disruption of some sort, I don't expect the markets to react to that.
I want to zoom in on one of the largest listed companies in the world, the Saudi Aramco. They reported a decline in profit. This is for a 10th straight quarter. The lower oil price has, of course, a lot to do with that. I look at the Saudi Aramco shares down, 14% so far in 2025. They've lost, I think that I did the math, it's around $800 billion of their market capitalization. Thinking about their peak valuation of $2.4 trillion. So that's almost about a third of the market capitalization in the span of 2 years. What is your reaction?
I think that Aramco is still one of the most resilient, if not the most resilient oil companies out there. You don't have any oil company that consistently just pays dividend, Yusuf, to all its shareholders. You have the government and then you have its shareholders, and it hasn't compromised on this dividend at all. Are all oil companies operating in a very challenging environment of low oil prices, lower margins, risks, lower investment? Yes, absolutely. But Aramco is just a different beast altogether. So when I look at these results, yes, it makes sense given the environment. But do I think, does this impact Aramco to the point where I'm seeing CapEx, for example, drop? I didn't see any. Despite that, you're still seeing a CapEx of 53 billion to, I think, 56 billion. Projects are ongoing. They're still going to maintain their oil production or maximum sustained capacity. They're going ahead with gas projects. They said that they will not let dividends ever be left unpaid. So putting all these things together, it's still not a bad company to invest in. Is it the right time to list it? For example, I don't know, there were kind of rumors at the time when, they IPO'd that they would go to Hong Kong or New York or whatever it was, or even list more of it. Maybe it's not the right time. Just generally speaking, this is not the right time to be listing an energy company. They would have to wait for a better time.
Well, given how much the stock price has dropped, is it the right time to buy at this price, especially since you just explained the dividend is almost guaranteed?
It is almost guaranteed. I don't like giving advice on anything to buy or sell, so I'll leave it to your viewers here.
All right, I thought I'd try my luck. Speaking of, for our global audience, we'd love to hear from you. Drop a comment below. Also, take a moment to hit that like button. Really appreciate that. I want to seg over to China. We talked about the United States. China deserves a little bit more of a closer look. So Standard Chartered said in its latest note that the economic indicators are likely to stall again. Deflation is still a significant headwind for the economy there. And they're saying that it's not sustainable what they're doing in the second half of the year. And I'm wondering how this is likely to weigh on the energy markets, given that China imported, 11 million barrels a day in June 2025?
Yeah, I mean, China is the powerhouse here. Whenever we talk about oil demand, you have to look at China first. And this is where the bulk of any increment comes from.
So
I
what are
think
you guys seeing in the data from your side?
No, I mean, just generally, we're seeing, I mean, what you mentioned there is really important, Yusuf, that, I mean, China needs to go through a kind of reconfiguration of its own economy. It's been exporting a lot over the past years, and it needs to really stimulate its own domestic demand. To what extent the government is going to support with more stimulus, that kind of, how effective it is, remains to be seen. But yes, we are seeing signs of a slowdown from China. Starting with the allocations that were for September, for example, we saw lower volumes from Saudi Arabia go into China. That's partly also due to maintenance and many other factors, but people are seeing that as a sign that, you know, we're going to see a gradual slowdown from China. You're not going to see these exceptional growth levels. It has to level off at some point, and I think we're coming to that point.
In 2024, there was all kinds of speculation, Amena, about countries like Saudi Arabia pricing their oil sales, or at least some of their oil sales, in Chinese yuan, for example. Why has that issue faded into the background as of 2025? It's almost like, you know, it's a non-starter this year versus last year. It was like, you know, almost a certainty. Is that also in part due to what's been happening with the new administration and Donald Trump in the White House, that Saudi Arabia felt more comfortable with the United States and was now prioritizing that relationship over China?
I don't think it's like either or. It's not black and white, really. I mean, Saudi Arabia still wants to maintain strong relationships in the East, and it also has, of course, a good relationship with the Trump administration. We all knew very clearly that under Biden, relations were lukewarm, and I'm being polite here by saying they were lukewarm.
I didn't see anything lukewarm about that. I mean, it was... You know, that was...
Well, they still had a relationship, but it wasn't great. It wasn't great. So when Trump came to the office, yeah, of course, they have a much stronger relationship with him. You saw the welcome that he got, Yusuf, when he came to Saudi Arabia, UAE, Qatar, etc. It was exceptional, historical, and so on. And they signed all of these deals. I think they're just headline deals that, you know, every visit has them. But at the same time, I mean, that option of pricing oil in a different currency, it usually pops up when you do have a little bit of friction with whatever administration the U.S. is under. Since that's gone, and to be frank with you, I don't think the pricing in rupees or yuan or dirhams or whatever other currency, we're not there yet. And if you're looking specifically at China, they don't have the same transparency or liquidity as the US dollar. So it'll be really, really difficult on a structural kind of basis to shift everything into another currency. So yeah, I didn't see it happening then. And definitely I don't see it happening now.
Capital account liberalization is how S&P would describe that. And the lack of a proper opening up is, yeah, as you just laid out, preventing a wider adoption of some of these alternative currencies. Let's talk about the IEA and OPEC. They've got diverging forecasts when it comes to oil demand growth. I want to know which camp Amena is in out of the two.
I don't like to pick camps, but maybe somewhere in the middle, right? Just somewhere in the middle. I mean, just according to Kpler's forecasts, we are forecasting a growth for this year of around 800,000 barrels per day. OPEC is on the very kind of bullish end of 1.2, maybe 1.3 million barrels. And the IEA, yeah, is lower. So I would say like somewhere in the middle. But yes, yeah, we have been absolutely seeing this clash between OPEC and the IEA, both camps accusing each other of being politicized and looking at the wrong data and so on. But just one thing on the IEA, I mean, their net zero scenario didn't really pan out in the way that they had laid it out. I mean, it just... When we entered the pandemic years, I think just reality bit here, and there is a sudden realization that yes, the upstream sector is really important. And when Europe got its Russian gas supplies cut off, they immediately went, to coal, wood. They burnt everything they had, Yusuf. So they didn't care about, carbon emissions at that time. They thought about energy security. So I think just reality managed to correct some of these kind of fantasy scenarios, if you may.
Well, there's definitely a group of people in the White House that is taking issue with certain components of the thinking process at the IEA. Politico broke news saying that the administration is demanding that the agency replace its number 2 leader, who's somebody more aligned with the president's policies. And this is according to multiple energy insiders. And this involves, again, the second-ranking position that's traditionally been filled by an American who has served in the role since 2021. Do you think they'll be successful in sort of piercing into the IEA as they've been successful in piercing into a lot of other international institutions and shaking things up?
I mean, it's no secret that Chris Wright, the energy secretary right now, is kind of against a lot of the IEA forecasts and scenarios, and wants to see a change and wants to see more transparency. So yeah, perhaps they will be successful at that. And if they're not successful at that, maybe this kind of opens up room for a new forecasting agency to open up. And maybe this forecasting agency could be based in the East. Still, you have a lot of, consuming states. If the IEA is supposed to be representative of consuming nations, then why don't we have a forecasting kind of body be based out of, I don't know, Hong Kong, Singapore, somewhere like that, and kind of have a more, fair view on where things are.
If anything, we need to consolidate. I mean, we don't need more institutions, right? So, between the IEA and the EIA and all the other variations, obviously
so
OPEC.
Many acronyms, yeah.
Yeah, so a quick note on the U.S., the strategic petroleum reserves, they're sort of drawn down now to multi-decade lows. I think the market's underestimating, the potential ramifications of that.
I think the market is underestimating two things. What you said on SPR going low, stock levels being low, just general OECD levels being, under the 5-year average. And they're also underestimating the lack of spare capacity. They haven't woken up to that fact yet. I mean, if we keep kind of growing at the same pace, you're going to reach a point where you don't have enough spare capacity. And just looking within the OPEC-Plus group, I mean, I only see 2 countries that could immediately bring on production in a short period of time. This is something OPEC, by the way, is working on redefining, just making sure that everyone in the group knows what maximum sustained capacity is, which is capacity that production you can bring online within 30 days and maintain for 90 days. And based on that definition, they're going to work on new baselines for everyone. It's going to take ages. They're going to have a lot of companies involved in this. And that's why these new baselines will only take effect in 2027. So is the market underestimating a few factors here? Yeah, I think it is. And that's why I don't think, sure, there's a bearish story to say if you're talking about the economy, slowdown, extra production, but there's also a very bullish story to say. And I don't think the market's paid attention to that.
Do you think that OPEC Plus has become a little bit too complex and bureaucratic, that because there are so many different voices and data points to consider, that they're unable to be as agile as they might need to be in a future crisis?
I think they've been very creative. I think they've been, again, very agile in having, who would think that this group, it's like herding cats, right? Every month you have...
Not an expert, but okay.
Yeah, I have a couple here. I can't herd them. So every month they have a meeting to review the market and set policy. So I think they've been very flexible. Ever since the pandemic, they've come up with creative ways. The group continues to evolve. And I think what's happening right now with the unwinding of the cuts is also really, really important, because you have basically 8 countries that are involved in these voluntary cuts. And then you have the rest of the group. They want to get rid of that. They want to, work collectively again. And this baseline also reevaluation is going to kind of unite the whole group once again. But given the situation, and sometimes you need to react really fast to correct the market and restore balance and make sure prices are at a certain level and so on. I think they've done a really good job.
Which country do you think is going to surprise global markets in the next 12 months, for better or for worse?
In terms of global growth, I mean,
In terms of the oil markets, right? So, in terms of production, in terms of supply, I mean, where do you think we're going to get a surprise big enough to maybe make a dent in a pretty resilient crude oil price?
I think, I mean, there's always kind of questions around whenever we're talking about Saudi Arabia, there are questions around, okay, does it really have the capacity? Could it really go to 12? All of these questions you start, getting when we get closer and closer. So if there is a need to bring back supply into the market really fast, if we do have an outage of some sort, I think Saudi Arabia is a country that could, again, I mean, it could surprise and it could, prove that it really does have the capacity that it's sitting on. Another surprise, which is not really a surprise, but it's just the inability of others to reach. I mean, maybe Russia is going to surprise some people by their inability to increase their production further.
If you had $10 million then to invest today, would you be long, short, or neither in terms of your position in the oil market on the price?
I don't invest in oil. That's just one disclaimer. But if in this kind of theoretical situation, I would be long.
Okay. A couple of personal questions. You've been inside some of the more important OPEC meetings. What's the most surprising thing that you've seen happen?
Well, one of the kind of really special moments where I saw is like the kind of evolution of OPEC that happened. You had the OPEC group, and then you had, Russia joining. I remember that meeting very well. I mean, it started. I mean, officially it was in Algeria, but it all started off in Qatar too. So this was a way for me to see how the group is expanding, how the group manages to retain kind of dominance over the market, have a louder voice, add more members. So yeah, that's one of the moments. And of course, during the pandemic, the decision to cut 10 million barrels a day, I will never forget that, having, to cover this all from home. I remember at the time people were saying, oh, you're inside the meeting room. I'm like, there is no meeting room. It's all virtual. And I was not on that call. So that was, that was an interesting moment and interesting coverage at the time.
Quick follow-up there. Is it your impression lately that governments are no longer prioritizing renewables as much because of the change of tone with a new administration in the White House? Would you say, the projects that they've committed to, especially in the Gulf, those are full steam ahead, but then newer projects, they might get delayed or reconsidered? The quick thought on that.
I don't think so. I mean, I still see the targets set and the dates that they said that they were going to, reaching net zero targets for many of the national oil companies, but also for the countries. Those are still in place. And I mean, there's no denying the transition. The transition is real. The transition is happening. There are just questions over the pace of the transition. And there's questions around, should we abandon oil and gas completely and just focus on renewable energy? It can't happen. That switch needs to be more kind of seamless, and just given the AI revolution, and we're going to need even more energy than we ever thought. So investing in all types of energy and this kind of pragmatism, which I'm seeing across the Gulf, that's something that's continuing, and I'm not seeing a slowdown in renewables.
So has your family switched to EVs then? What's the timeline there?
No, we haven't switched to EVs. We're not fans. Okay. But would we consider maybe a hybrid at some point? Yeah, maybe. But again, I mean, it depends where you live, the infrastructure, how you could charge the car. I mean, the logistics of it. If I live in Saudi Arabia, no, I don't think I would consider an EV. In Europe, yeah, perhaps, but a hybrid again.
Yeah, I was looking at the fuel consumption of the car I'm currently driving, and as of yesterday, I was getting 12 miles per gallon. So they wouldn't let me through the door in Europe with that kind of mileage. It's yeah. I need like a fuel station behind me. That's how bad it is at the moment. When you look back over the course of your career, if you had to pinpoint the toughest moment or a moment where you were able to, obviously it would have taken time, but you were able to grow a lot from, what would that moment be? What would you share?
I would say, at the very, very start, deciding on covering the energy sector or oil in general. I always thought, just growing up or just going to university in Egypt, I always had this passion of covering geopolitics. I always knew that I was going to be a journalist, by the way. My nickname in Egypt was Reuters, because I used to tell everyone what's going around. So they were like, yeah, Reuters, yeah, Reuters. I didn't even know what Reuters was at the time. And then I decided, I'm like, okay, I'm going to discover what this Reuters is. What is it? And it was this big wired news agency. And I was quite, adamant and joining in and becoming part of Reuters, which did happen when I came here to Dubai. So the idea of just switching from kind of geopolitics, general news, and going into a more specialized focus, which is oil and gas, that I think is a moment that I remember very clearly. And it was an advice by a senior editor here in Abu Dhabi when I was at the national newspaper. He said to me, listen, if you're going to stay in the Gulf, you have to cover oil. Forget geopolitics. It's all linked in, but just focus on oil. So yeah, that was my moment.
How do you stay motivated? What are your hobbies? Because you bring a lot of energy to this conversation and the work you do. So, maybe there's a secret behind it.
Coffee, just lots of coffee. You don't eat and you just, no, that's a very unhealthy way to go about life. But yeah, hobbies. I have some weird hobbies. I grew up in Finland. My father was a diplomat there. So they taught us really weird stuff, Yusuf. Like I could use a sewing machine. I know how to knit. I can pick wild mushrooms that are not poisonous. And I'm really good at woodwork. So I have things that people would never, think that I would be able to do. Quite handy around the house. Yeah.
I can't even remotely compete. I've got nothing. No. Amena, thank you so much. This has been wonderful. So, this has been quite eye-opening. And we'll see you real soon. Thanks again.
Thank you, Yusuf. Take care.
Thank you for listening to You're in Business. If you've enjoyed the conversation, like, share, and subscribe. See you next time.